Hello everyone, welcome to the first module of your VITA training, Filing Status and Dependency. By the end of this module, you will understand how to select the appropriate filing status and understand how filing status and dependence affect tax returns. Here is an overview of the subjects we'll be covering. If you need to return to a subject to review, you can come back to this page and these links will take you to different sections of the slideshow. So what is a dependent? You may have seen the words dependent on tax forms previously, but what does this mean exactly to the IRS? A dependent is someone other than the taxpayer or the spouse who entitles the taxpayer to claim a dependency exemption as defined by the IRS. Claiming a dependent can affect other aspects of the tax process like filing status and some credits. Dependents must pass a number of tests to qualify. By tests, the IRS means that the person being claimed must pass certain eligibility criteria outlined in a flowchart. The dependent can either be a qualifying child or a qualifying relative. Okay, so let's say I had a friend who's been living on my couch for more than half the year. I pay more than half of their expenses, and they rely on me for gas money. Can my freeloading friend be considered a dependent? Let's see. A dependent can be a qualifying child, son, daughter, stepchild, grandchild, brother, sister, half-brother, half-sister, stepbrother, stepsister, or descendant of any of these relatives. However, in order to be a qualifying child, they must be under age 19 at the end of the year and younger than the taxpayer. If they are under 24 and a full-time student more than 5 months out of the year, they can also be claimed as a dependent. If someone is permanently and totally disabled, they can be claimed as a dependent regardless of age. A qualifying child must be a U.S. citizen living with you for more than half the year, with the exception of temporary absences. To meet this test, the child can't have provided more than half of their own support or can't file a joint return for the year. Let's take a look at the 4 tests that must be met for a person to be a qualifying relative. For example, let's say I have one child under 18. If my child can be claimed on someone else's tax return, then they cannot qualify as a dependent for my tax returns. However, let's say I have an aunt who lives down the street from me who is fully disabled. She makes less than $4,700 a year and I pay all of her total support. She can be claimed as a dependent on my returns. Now let's say that same aunt is supported 25% by me, 45% by my brother who lives 100 miles away, and 30% by my parents. We would need to file a multiple support declaration. Sometimes there are tiebreaker rules which can determine who can claim the person as a qualifying relative. Please refer to page B15 in publication 4012 for information on qualifying relatives. This is the current flowchart test to determine whether someone can be claimed as a dependent. It's essentially a chart of questions. Your 4012 handbook is full of different tests like these in order to determine eligibility and can be very helpful when someone is unsure of how they should file. Remember my friend living on my couch who I provided for more than half the year? Well, since they're not my child and they're not a qualifying relative, I cannot claim them on my tax returns. Take a pause, take a look at these footnotes, and review some of these aspects that make up a qualifying person, qualifying child, or qualifying relative. Feel free to hit pause on this video. So, having a dependent may qualify a taxpayer for some benefits at the state and federal level. Let's take a look at the impact of dependents on a tax return. Claiming a dependent on your tax return could lead to some potential tax benefits. There's the child tax credit, up to $2,000 per child under the age of 17. There's the education or American Opportunity Credit, up to $2,500. Or you could also file as head of household, which gives you a $20,800 standard deduction. This is significantly more than the alternative of filing single or married filing single, which has a $13,850 deduction. Let's review. A dependent must be the taxpayer's qualifying child or qualifying relative. The qualifying child must pass a relationship, age, residency, support, and joint return test. A qualifying relative must pass qualifying child, household membership, gross income, and support tests. Refer to Tab C Dependents in your 4012 publication for any information needed on whether a person is a qualifying relative or qualifying child. So, what is your filing status and why does this matter? With taxes, these filing statuses determine the rates for everything that you file on your return. Let's go over the statuses and the differences between them. On each tax return, taxpayers must choose one of the 5 filing statuses: single, married filing jointly, married filing separately, head of household, or qualifying surviving spouse. The last 2 statuses you will need to address dependency before addressing filing. These 2 statuses are linked to having a dependent. Any filing status where someone else can claim the taxpayer as a dependent has a different filing threshold. Each of these 5 filing statuses determines the amount of the standard deduction. The standard deduction is the amount of non-taxable income on a person's return. There is a minimum earning threshold for who is required to file in each status, but even if the minimum threshold is not met, there can be many cases where the taxpayer would want to file as they qualify for a higher refund. TaxSlayer Pro calculates returns based on the status and minimum earnings, but as the volunteer, you would be checking on whether the status is the most accurate and beneficial for the client. For example, someone who comes into the tax office who is single with 5 dependents. You may want to see if they qualify for head of household, as they could get a bigger deduction. It is all in what is the best interest of the client, what they qualify for, and what kind of refund they could be eligible for. Let's go over how to determine filing status based on taxpayer scenarios and life events. So what does single as a filing status mean to the IRS? It all comes down to whether they were unmarried on the last day of the calendar year. Unmarried means never been married, divorced, legally separated with a court decree, or surviving spouse where they do not meet the qualifying surviving spouse filing status criteria. Legally separated with a court decree is out of our scope as a VITA volunteer. We would suggest they see a professional tax filer as we are untrained for that status. For example, Scott's divorce was finalized on December 30th, 2023, and he has no dependents. What would his filing status be for 2023? If you guess single because he was considered divorced on the last day of the calendar year, you are correct. Now, let's say Scott's divorce is finalized on January 1st, 2024, and he has no dependents. He should file as married filing jointly or married filing separately, depending on what he and his ex-spouse decide, because he was still legally married at the end of the tax year. He could also qualify for head of household if he has a qualifying person. If 2 taxpayers are married, they can file a joint return for that year or choose to file separately. Many states have one tax table which can create a marriage penalty where a couple would pay more than each filing separately. They can choose only one filing status and it applies to both their federal and state return. This can cause couples to choose to file married filing single for both their federal and state tax return if it lowers their combined tax bill. The tax code considers a couple married for filing purposes until they get a final decree of divorce or separate maintenance. Taxpayers may be in a common law marriage according to state law where the marriage began and file married filing jointly. California recognizes common law marriages or registered domestic partners as able to file a joint return. If one of the 2 married taxpayers dies during the year, the deceased will still need to have their taxes filed. Depending on the date of death, the spouse can file single or married filing jointly. If a spouse were to die, the married couple lived together, did not have any children or grandchildren, and that surviving spouse never married, then the surviving spouse can file married filing jointly for the tax season. If one spouse dies and the other remarries in the same year, the deceased spouse files married filing separately. Take a look at these scenarios for the date of a spouse's death. Those will determine options for filing in the following tax season. A married couple can choose to each file a separate return, which can be beneficial if it results in less tax owed. There are special rules pertaining to married couples who choose to file separate returns. They are taxed higher than married filing jointly. There is no credit for child and dependent care expenses, no earned income tax credit, no higher education credits, no exclusion or credit for adoption expenses, no student loan interest deduction, no exclusion for interest income from qualified U.S. savings bonds used for higher education expenses. The married filing single threshold is $5 of gross income, and if the taxpayer and spouse live together at any time in the year, 85% of Social Security income is taxed. On top of that, if one spouse elects to use itemized deductions, both must itemize. Generally, the tax law encourages married couples to file a joint return for these reasons. If a taxpayer is unmarried, paying the bills, and taking care of another person or dependent, they will likely qualify for head of household. This is a status with a high standard deduction, and this helps single parents or caregivers during tax season who are responsible for maintaining household costs. They must meet all three of these tests to qualify. For housing, the taxpayer needs to have paid more than half the cost of maintaining the home for the year. This only includes home expenses such as rent, fair market rental value of the home, repairs, utilities, and groceries. The taxpayer must also have a qualifying person who has lived in the taxpayer's home more than half the year, unless that person is a dependent parent. The dependent parent doesn't need to live with the taxpayer to qualify. Only those who are unmarried, legally separated, or divorced before December 31st qualify. A married taxpayer can only claim head of household if they did not live with their spouse for the last 6 months of the year and meet the other two qualifying criteria. In this case, the qualifying person can only be the taxpayer's dependent child, stepchild, or foster child. Let's look at these examples. Jeremy is divorced and paid for 100% of the cost for keeping up his home for the year. His son lives with him, and he is the primary caregiver for his minor child. What is his filing status? In this case, head of household, because he meets all the requirements necessary. Now, let's say Jeremy is divorced and paid 100% of the cost for keeping up his home for the year. His minor child lived in the house for 3 months in the summer. What is his filing status? The answer is single. He does not meet the head of household qualifications because his son did not live with him for more than half the year. Let's take a look at qualifying surviving spouse with a dependent child. For the 2 tax years after a spouse has died, a surviving spouse with children may file using this status. The surviving spouse must have paid more than half the cost of keeping up the home for the year for the surviving spouse and the child. Refer to page B14 in publication 4012 for a flowchart on determining this and other filing statuses. Depending on which status you file as, your status can impact a tax return in a few ways listed here. Essentially, this will determine a taxpayer's income bracket, which impacts how much your tax liability is for the year or if you qualify for certain benefits. It is important to determine the best and most accurate status for each taxpayer, as each has a separate financial bracket. If you aren't sure, refer to the 4012 guidebook or the website listed on the recap page, What is my filing status? Let's review. There are 5 filing statuses, and taxpayers must indicate one filing status on the return: single, married filing jointly, married filing separately, head of household, and qualifying surviving spouse with dependent child. Some taxpayers will file who are dependent of another taxpayer. There's a unique formula for filing threshold, standard deduction, and other tax credits. Filing status depends on marital status, dependents that can be claimed by the taxpayer, and the taxpayer's living situation. Filing status impacts many aspects of the tax return, including the tax bracket, standard deduction, and eligibility of other credits. Help is available by using the IRS Interactive Tax Assistant, What is My Filing Status? Here are some follow-up articles and information to increase your knowledge on the subject of filing status and dependents. Here are some follow-up website articles from irs.gov. If you have any questions or need some help with the subject of filing status and dependents, be sure to write them down and we will address them in our next in-person lab. Or email your site coordinator and they will help link you to some other resources or information. We'll see you in the next videos on income.